All right, let's get straight into it. We're talking market cycles. Morgan, you're scrolling through Twitter, you're on YouTube. How many people do you see acting like the market only moves in a dead straight line?
Mate, it's a madness, isn't it? They see a bit of green, they think they're Warren Buffett's prodigy.
Yeah.
They see a splash of red, and they are running for the hills, screaming the sky is falling. Absolutely zero chill.
Exactly. They've got no concept of the bigger picture, the rhythm of it all.
None.
Which is why today we're pulling a page straight from the CMT Level 1 playbook, How Market Cycles Actually Work.
Right.
Because listen, this ain't random. It's a pattern, a dance.
And the first steps of that dance were mapped out by the OG, Charles Dow.
Okay.
You know, the geezer behind the Dow Jones Index?
Right.
This isn't some crypto bro in Dubai theory. This is the foundation. He said you've got to understand the different types of trends.
Go on then, Professor Morgan. You've got the floor. Hit him with the knowledge.
Simple, right? You've got your primary trend.
Okay.
That's the big one, the main direction of the market lasting for a year, maybe more. The easiest way to think of it is like the tide. It's either coming in or going out. The big, slow, powerful move that you can't ignore. Got it. Then you've got the secondary trend.
Right.
This is a correction moving against the primary trend. Last a few weeks, maybe a few months. These are the waves on top of the tide. And finally, you've got the minor trends. That's the daily chop, the noise, the little ripples on the waves.
I like that.
Tide, waves, ripples. So when the market's in a massive bull run, the tide is coming in, you'll still get a few weeks where it pulls back hard. Yeah, that's just the wave, mate. It's the market taking a breather.
Exactly.
Well, that's when people lose their minds, isn't it? Every single time. They see a wave pulling back and they think the whole ocean's about to dry up.
Yeah.
The point of Dow's theory is learning to tell the difference. Are you just getting hit by a wave, or is the whole tide genuinely turning? It's all about context.
Context. That's the word.
And that leads us to the proper meat of this.
The part that, if you really get it, will stop you from being the guy who always buys high and panic sells low.
Right.
Let's talk about the 4 phases. Let's talk Wyckoff.
Right. So this legend, Richard Wyckoff, he gave us a proper roadmap. Phase 1. Accumulation.
Okay.
This is after a massive crash. The news is apocalyptic. Everyone is terrified, saying stocks are dead.
Right.
But behind the scenes, the smart money, the big institutions, the hedge funds, they start buying quietly. The price chart just moves sideways. It looks dead boring.
It's the ultimate heist movie setup.
Totally.
The crew is silently loading up the getaway van with gold bars while the rest of the street is on fire.
Yeah.
The public is crying into their cereal, and the big dogs are just calmly filling their shopping trolleys with discounted assets. What's next?
Phase 2. Mark up.
Okay.
This is the party starting. The price breaks out of that boring sideways range and starts to properly climb.
Right.
The early adopters are in, and now the wider public starts to notice. Your mates who know nothing about finance start asking you for stock tips. FOMO, the fear of missing out, is kicking in hard.
The my Uber driver told me to buy it phase.
This is the bull run everyone dreams of. The music is pumping, the profits are flowing, everyone feels like a certified genius. For a little while anyway. Which brings us to phase 3, distribution.
Right.
This is the price is near its peak, and the feeling is pure euphoria.
Yeah.
You hear the 4 most dangerous words in investing. This time, it's different.
Oh, God.
But this right here is when the smart money, the ones who are buying in the accumulation phase, they start to sell. They are quietly, systematically offloading their shares to the euphoric mob. It's the VIPs slipping out the back exit of the nightclub while the main dance floor is still absolutely rammed. Yeah, exactly.
Can still hear the sirens in the distance. They know the party is about to be shut down.
Yeah.
It's so sneaky.
It's brutal. And then comes the final act, phase 4, markdown.
Oh, boy.
This is when supply finally crushes demand because the big boys have finished selling and there are no big buyers left. The price starts to tank. The public, who just bought in at the top, now panics. They start to sell to cut their losses, and the club lights flicker on.
Yeah. The music cuts out, the floor is sticky, and you're left standing there looking like a ripe lemon.
Yeah. That's the bear market.
Yeah.
And the smart money that's sold at the top, they're on the beach somewhere, just waiting for it all to crash and burn so they can come back and start accumulating all over again.
And that's the machine. Accumulation, markup, distribution, markdown.
Right.
Round and round it goes.
Yeah.
And the fuel that powers this entire engine is one thing: Human emotion.
It is.
This is the absolute key. Forget the fancy indicators for a second. The market cycle is just a massive collective mood swing between fear and greed.
It is.
There's that famous chart, isn't it? The 14 stages of investor emotion.
It's class because it's so true. It starts with optimism when you place a trade. Things start moving your way. You feel excitement, then thrill.
Yep.
You start thinking, you know what? I'm actually pretty good at this.
Oh, I've been there. You nailed 2 trades in a row, and suddenly you're the Wolf of Wallington, thinking about what color to get your Lambo in.
Then hits euphoria.
Ah.
This is the danger zone. You feel invincible.
Yeah.
You're taking tips from a 15-year-old on TikTok.
Oh, God.
This is the point of maximum financial risk because you think risk has disappeared.
And then the music wobbles. The market turns just a little bit. You're in anxiety. It's just a healthy pullback. It'll bounce. Then it drops more. Now you're in denial. You tell your mates, oh, me? Nah, I'm a long-term investor in this one.
The classic. You went from day trader to a value investor in 24 hours because your trade went south.
After denial comes fear. Then desperation and finally full-blown panic.
Oh, man.
You just want the pain to stop.
And that's when you sell, right at the absolute bottom.
Yep. They call it capitulation. You surrender. You throw in the towel, can't take any more seconds of watching your money evaporate. You sell, probably for a crippling loss.
And once you've sold, you hit despondency. I'm never trading again. The market is a rigged casino.
Been there?
You delete your trading app.
Yep. Been there. But guess what?
That exact moment, the point of maximum pain, of gut-wrenching pessimism, that is the point of maximum financial opportunity.
Wow. That's when the cycle resets.
That's when the smart money comes back to begin accumulation.
It's mad, isn't it? The whole system is a wealth transfer mechanism.
Right.
It transfers money from those who are driven by emotion to those who are disciplined.
Yeah.
From the herd to the contrarian.
It's literally what Buffett means when he says, be fearful when others are greedy, and greedy when others are fearful. Exactly. When everyone is euphoric, greedy, you should be fearful. Distribution.
Right.
When everyone is despondent, fearful, that's your signal to get greedy. Accumulation.
So the practical street smart lesson here is to become an observer. Look at the news. Is every headline screaming about a new paradigm and endless profits, or is it all doom, gloom, and financial apocalypse?
Yep.
Look at your mates. Are they bragging about their crypto gains, or are they too depressed to even talk about their portfolio?
And most importantly, look at your own emotions. Be brutally honest.
Right.
If you feel euphoric, like you can't lose, maybe it's time to take some profit off the table.
Yeah.
If you are absolutely terrified and have the urge to sell everything you own, maybe you should pause, take a deep breath, and consider if this is the very bottom. You have to train yourself to act as the opposite of your most powerful instincts.
It's about not being the last one at the party. You want to be there for the best part, for sure, but you need to know where the exit is before the lights come on.
Be the promoter, not the punter who pays £50 at the door at 2 a.m.
That's the game. Simple, but not easy. Look, we could go on for hours. If you want to chop all this up with us, ask questions, or just have a laugh about the time you got completely rugged in the euphoria phase, we've all been there, then come and join our chat group. The link's down below in the description. Hop in and have a laugh with us.
Get in there. It's a good crowd.